Welcome back to Good Morning Kenya. The show continues. My name is Mike Megwe, and right about now, we are going to delve into matters saving. We are talking about the culture of saving in the country. And to help me in this conversation, I'm joined by three guests in the studio. I'm joined by Claudia Ngaira, who is the Capacity Development Financial Senior Advisor at DSIK. I'm also joined by Joan Atuhura, who is the Head of Finance and Administration at ACOSCA. And I'm also joined by one gentleman who is David Mukaru, and he is the CEO at Caritas Microfinance Bank. Karibuni kwa studio. Asante, mnaendeleaje? Now, to start off, savings is one of the important things or when it comes to global economic development, and even at a personal level. I'd love to know, what is your opinion on the general savings culture in the country? Let me start with you, Madam Claudia.
Thank you very much for this opportunity.
Yes.
My personal opinion that may resonate to many others about savings culture in Kenya is that chances are that savings culture in Kenya is not as rich as it would have been elsewhere. Maybe because of so many reasons. People are finding it hard to save with reasons and excuses. Like, people will say, I wouldn't save because I don't have enough income, or I don't know where to save or what to save, or even why should I even be saving. So generally my own opinion could be that savings is not as an enriched culture in Kenya like any other that you would have expected. Yeah.
Bwana David, what is your opinion in so far as savings in the country, the saving culture in the country is concerned?
Thank you very much for the question. Let me start by saying that this is a week we call the Savings Week in the world.
Yes.
And 31st of October, it was the savings, the World Saving Day.
Yes.
And this is a tradition that emanated all the way from 1924, when a group of savings banks met somewhere in Milan,
yes,
Italy. And what came out very strongly then was the importance of savings. And after the Congress, they agreed that a specific day should be set aside to celebrate savings. And savings as a culture is what now you are asking.
Yes.
What is the importance of savings, and why are Kenyans not savings? Let me put it into perspective. Only when you compare the savings rate in Kenya, it's only about 13%. Yes. Savings rate. Yes. This is savings compared to what you make as an income.
Yes.
And in Kenya is the gross domestic income.
Yeah.
When you look at that compared to Africa, which is about 26%, then you can see Kenya is savings in Kenya is very low. When again you come down to East Africa, Kenya is also lagging behind in terms of savings. Because East Africa, the average savings in East Africa is over 20%, and Kenya is saving only 13%. So this is a challenge, and it's what you've asked. What are the issues? It's about culture. Kenyans are consumers mostly. They emphasize on consumption, and this is where the challenge comes in. We want to consume, we borrow, to consume. We get into debt, and even as a country, because savings will talk about an individual, savings will talk about a country, savings will talk about an institution. As Caritas Microfinance Bank,
yes,
we focus on the family, and we also now go down and ask, how do we now support the family to be able to save? But the culture is very low, and this is one area that we really need to improve as a country.
Well, Joan, I'd love to know, over time, the financial sector has experienced a low uptake of savings products and services. How can this be reversed?
Well, there's been a low savings culture, and of course we know that to reverse this, it takes a multifaceted approach, whereby we need interventions from the government, we need interventions from educational sectors, we need interventions from other stakeholders, NGOs that are geared towards seeing that savings as a culture is changed.
Yes.
And this will be maybe through offering financial literacy. Yeah, we like as a COSCA, as an institution, we promote financial inclusion, and this is done through capacity building. And we've seen a lot of change in the services we've seen a lot of change in behavior based on the services that we offer through capacity building, through trainings. And specifically, we have, through the partnership we have with DSIK, this the word is a little German, so Claudia can mention it better.
Yes.
Yeah, so we've seen that through the micro business games that we have, these are simulation games where we are able to impact financial behavior of a member, and of course we look at the decisions that the members take and how these impact their overall financial health. We also look at the savings games that have been instrumental in promoting behavior in terms of the decisions you make today. How do they affect your tomorrow? How do they affect your future? How do they affect your financial resilience as an individual? So what I'm trying to say is education will be key in changing the behavior, in improving the savings culture behavior, and also looking at the financial habits. That too has to be looked into.
Yes.
Yeah, and of course we also look at incentives, policies in place that can also help address gaps that are existing currently.
Yes.
Yes.
So maybe a person watching right now would love to know, what are the favorable savings, what would a favorable savings environment look like? Let me start with you.
Yeah. A favorable savings environment is one that enables or that provides an environment where a member can easily save for the future, where a member can easily save and invest so that they have a better future ahead. And of course, this is influenced by a number of factors, things to do with financial access. How easy is it to walk into a financial institution and open an account? How is the entry? Is it easy to get into, say, a circle and say, I want to join this circle? Do you have the means to join the circle? Are there restrictions like minimum balances, things to do with minimum share capital that is required? Are those a hindrance? So for me, a favorable environment is one that makes it easy for members to come into the sector.
Yes.
And of course, looking at the financial access, we have the finances, the financial access circles, banks available.
Yes.
We also do have issues to do with the regulation.
Yes.
There should be favorable regulation in place to foster growth of the savings, more likely circles, savings and credit associations. We also look at other aspects like education. There should be financial literacy that will enable members to be able to make good decisions or judgments for their future tomorrow. Yeah.
Now, Bwana David, even as we talk about saving, there's someone out there, when you mention savings, the first thing that comes to their mind is investment. They think saving is an investment. Maybe it would be better if you differentiate the two, savings and investment.
Savings is an investment. Let me start from there. Because savings is what you put aside after you have consumed. So you get an income, you have some, you save, because many challenges is where you get an income, you spend, and then what remains is what you save. What the saving culture we are advocating is where you have a focus. You are saving before you spend. So after you spend, after you save, the question now is, does that savings account become an investment? Because that's what you're asking. Do you earn interest on it? Because a savings account should be an investment account.
Yes.
What I should be able to answer for you is the difference between a savings account and a transaction account. Because that's where now the difference comes in. A transaction account is where you put in your money from a business or from a salary.
Yes.
Then a savings account is where now you move that money from a transaction account into a savings account as an investment, so that now you can be able to get some interest on top of it. And interest is very important because it protects that money against inflation.
Yes.
So savings After you put it in an investment where it's a liquid investment, the question now you ask is what else, where else can I be able to invest this money in? Various people will put it back in a business after a year or so. Various people will put that money in a focused area. For instance, if you are saving if you are a young man, probably you are saving to go back to school, then you'll put that money in a school fees. You are saving to buy a laptop because you're a student, then you buy that laptop. So you invest in something that you had planned for. So target saving is very, very important. Saving for its own sake is really a challenge. Yes. And you must be able to ask yourself, why do you save and what do you want to save for? There are various areas that you can be able to save on.
Still on you, Kenyan market has several innovative financial products that in many ways affect how people save. Have these innovations affected savings within your markets?
Yes, both positively and negatively.
Please.
Yeah, positively, I can say the digital era we are living in has exposed the rural people who otherwise would not have had financial access to be able to start saving.
Yes.
Yeah, through their mobile phones.
Yes.
Through various digital channels.
Yes.
And this has increased savings in the country, and it's a good innovation. So to that extent, I would say digital has come out very strongly. Other innovations have been agency banking, which has spread all its wings across the country. Deep in the rural area, you will find an agent, either a Safaricom agent or a SACCO agent or a commercial bank agent or a microfinance agent. So those are innovations. Those are technologies that have deepened access to financial services and savings to that extent. That's what we consider as the last mile of financial service connectivity. Other innovations have also impacted negatively on savings. One is the emphasis on borrowing. You see, when we emphasize too much on borrowing, then we erode the culture of savings.
Yes.
And I think it's one of the areas as banks that we are really focusing on, that we must be able to be savings-led. We must be able to ensure that our people save. They don't just look at a loan. When you see a TV, when you are walking around the streets, do you see yourself saving towards that TV, or do you see yourself borrowing to take that TV? And the culture now is we should see ourselves saving to acquire that resource that we actually want to do. The other innovation that has impacted negatively is the betting, the culture of betting in this country. It's so high. It's so high that it's affecting negatively even the culture of investment.
Yes.
That people now believe that when you bet, that's when you get a lump sum of money for you to invest in.
Yes.
That is a fallacy.
Yes.
And we as Kenyans must be responsible enough and ethical enough to tell our people that it is savings that you are able to put together a lump sum of money to be able to invest, and not betting. Betting is gambling, and we must call it the way it is, that betting is not saving, betting is gambling. Yes. And we must be able to transform our people and change the way they perceive savings vis-a-vis betting.
Yes. Let me come to you, Claudia. And I'll throw this question to both of you, but let me start with you. What are your sectors doing to leverage on these innovations to promote savings?
Generally, the microfinance from our end, is both the SACCO sector and the microfinance sectors. And on this issue of leveraging the challenges that come with innovations, I know there are quite a number, but from DSIK where we sit and stand is that first, we are deep into trainings, and our trainings are very interesting.
Yes.
There are simulation games that somebody can easily train and learn as you learn as you do. We call them games because it's an innovative way of training, where there's something, an aspect are given to you, and then you do it practically as you gain the knowledge, and also in addition to that, now you do the know-how sessions that are attached to what you've been doing. And so from our end, we do lots of innovative trainings. That will be the key of it for this season is the savings game, where a family setup, you're given a family story, a family setup of an average of 21 years, and people are taken through what are likely things that are going to happen within 21 years of a family. Somebody's going to be born, go to school, get married, get old. As you do that, how do you also inculcate savings? Like, is a family able to save for their medical bills? Is a family able to save for something like their, for example, wedding or business? What are the children being taught as they grow up in that setup? Do they go to school and are just if somebody wants a laptop, they're given because it is my right, or can I do something along with my parents so that I can get this thing like I'm earning it? So one of the innovative ways for us from our end is the savings games and any other business games that we do. But now to the microfinance institutions, there are so many other that people have picked up as innovative ways. Like, for instance, if I will speak for, I'm both a client of a microfinance institution and also a SACCO, and it's very easy that we are able to just save from your phone. I can easily send money to my SACCO from my phone. It is innovation. It would have been, I would have been required to carry that money and take it to the bank, and as you know, alongside the streets of town, I will buy something, I will waste that money. But because I am at a liberty of sending using my phone, it has helped me like now be able to save. There are platforms in institutions that encourage savings, like I understand there is a 52 weekly challenge that is an innovative way that you are motivated to tabulate your savings so that by the end of the year you have this amount of money. So the Innovation School have been brought a lot of challenges in terms of maybe multi-borrowing and in decreased savings. But if you are purposeful and intentional as yourself, you will easily save a lot of money. And there are quite a number of platforms. There are saving apps, there are saving digital lending platforms that you not only save, but you also borrow from your credit limits.
Yes. Joanne, if even as you answer the question on how you are doing to leverage on these innovations to promote savings, I'd love also to know the available products that you have to enhance this culture.
Okay, thank you very much. So, getting back to the question on leveraging innovations to promote savings in the SACCOs, we've seen SACCOs introduce digital services whereby they have online and digital online and banking services. We've seen SACCOs get into online applications for loans. You no longer need to go to the SACCOs to queue and seek signatures, but we are seeing lots of SACCOs getting onto the technology and trying to use the technology to advance services to the members. We're seeing also automation that has been made for savings, like, you know, on maybe per week, you just deduct maybe 1,000 and save it to my account. So we are seeing a lot of automation that has been taken, that has been done. And we're also seeing ATM services where banks are collaborating and integrating their services with the banks and other fintechs in order to offer services to their members. And we're also seeing SACCOs now getting into opening up chat boxes in order to support members and to enhance member engagement, so that then there is that dual communication, because as you know, for SACCOs, the member is the owner. So there is need for constant engagement and communication between the two. We have also seen, of course, there are also all the social media platforms where members can lodge maybe any challenges they're faced with or any queries that they do have, and there's been robust and increased response in terms of the engagement between the member and the SACCO. And of course, this has opened up a window of opportunity for inclusion in terms of being attractive to the youth, because we are seeing that SACCOs, as they are right now, we are faced with the challenge of aging membership, and if we are not deliberate in coming up with approaches or adopting technologies that can actually make our institutions attractive to the youth, then we are likely to stagnate or even diminish at the end of the day or vanish. Yeah, so what we're seeing here is innovation has been quite key in embracing the growth in the sector. And when it comes to some of the products that are being offered, I think basically I'll talk about the regular savings products. There is also the fixed deposit products, whereby you're given an incentive or a return on investment based on how long you're saving. We're also seeing holiday savings and so forth, but there are quite a number of savings products that the circles have actually come up with in order to ensure that the culture of saving is elevated. And of course, I know we also have the diaspora circles that are also helping communities outside Kenya to be able to save.
Okay. Yeah. We are going to take a short break, and when we come back, we'll look at how regulatory framework relates to saving. We take a short break. We'll be right back. Welcome back. If you're just joining us, this is Good Morning Kenya, and we are talking about the savings culture in Kenya. Before we went on a break, we were talking about the products you have for to enhance savings. Bwana David, if you can comment on that.
Let me comment on that on behalf of Association of Microfinance Institutions,
Please.
Where I am the vice chair. We have a membership of over 70 institutions that have been in this country for a long time and contributed significantly to the development of the savings culture. We have what we call the credit-only microfinance institution that provide loans, but they also have an underlying savings culture strategy. Where the members are asked to save first. You save first, and then based on the savings that you have, you are able to receive an X amount of loan. And this is something that has happened since the 70s in this country. So it has contributed immensely to the culture, to the savings culture of this country. That is one. Secondly, are the microfinance banks that have leveraged on technology, that as it has been mentioned, leveraged on technology, that banking is no longer where you go, but what you do where you are. Anytime, anywhere, you can be able to access financial services through digital. So microfinance banks have invested immensely on digital platforms to just enable our members will be able to save. Most microfinance institutions have come up with specific products. One, they have what you call a transaction account, where they encourage you to open and transact from, so that you don't mix it with what we call a savings account, where you now put money aside for a rainy day, as they say, kidogo kidogo ujaza kibaba. They have various products around the savings area. Where I sit as a CEO, Caritas Microfinance Bank, we have what we call maono. Maono, you know, vision. What is your vision? Maono yako ni gani? Na unataka kufanya nini ndani ya muda fulani? So what exactly do you want to do in future? So we have, and there are various institutions have various terminologies, various names, various products to just be able to encourage the people. And those products are packaged in a way that members are able to save without paying. You know, regularly they're able to save from their mobile phones. They're able to save from their village, either through an agent. So we have various products. And we also have what we call non-financial services, which is now financial literacy. That we have been training, we have been sensitizing our people on financial literacy. And financial literacy is on how do you behave when you have money, and how should you behave when you have that one money.
Yes.
And what are the principles of financial literacy? How does financial literacy assist you to be a better person? For instance, we encourage households, we encourage families to have at least a minimum of 6 times the amount of saving put together of what they spend on a monthly basis. So, so that's the first goal. That for you to build resilience, for you to build to ensure that you don't fall into poverty immediately you are sacked, or immediately the rains don't come in, then how do you plan for it? And we encourage them that if you spend a total of X per month, multiply that by 6 and ensure that you are saving towards that first goal. Once you attain the first goal of resilience as a family, then now you can be able to move to other activities. So savings for us is very critical, and we are very, very targeted as Amphi to ensure that works.
John, I'd like to know, is the regulatory framework right now conducive for the promotion of savings culture in the country?
Yes, the regulatory framework is conducive for promoting growth and stability of SACCOs. We've seen over time there's been growth in the SACCO sector, and this mainly has been attributed towards having a robust regulatory framework. As a COSCA, we are the conveners of the Regulatory Roundtable for Africa, and it is an avenue where we get to meet various policymakers from different countries, and we get to discuss issues affecting policy of SACCOs and advocate for fair play, and of course with bearing in mind that consumer protection is key at this point. And of course this again hinges on the fact that we are interested in seeing that the savings that the members contribute to the SACCOs are safe and sound. And as a regulator, the regulatory framework comes into put in place prudential regulations and supervisory guidelines that are really key to ensure that there is stability in the sector and that we do not see abuse. We see strengthened governance structures. And of course, in the past we've seen that most of the SACCO sectors have been affected by poor governance, which is a major hindrance in most of the African countries. In Africa, we only have up to about 7 countries that have a SACCO-specific regulation, and the trend has been that the SACCOs, the countries that do have these regulations, we've seen a trajectory growth in the SACCOs, in the savings, due to the regulation compared to countries that have not actually gone into regulating the sector as effectively as Kenya has done. Okay.
Claudia, I'd love to know, as we conclude, I'd love to know what you are currently doing at your institutional level to promote savings culture and sustainable savings culture through your partnerships.
Thank you very much. From where I sit, we have quite a number of activities we are doing with our partners, that is ACOSCA and AMFI, to reach out to clients, that person at the bottom of the pyramid, that person who might not even be known as much. So what we do currently in regards to saving is we are conducting business games, and this is called the savings game, a simulation way of teaching the family setup how to increase their savings, how to save specifically for a certain goal, how to achieve their goals. In addition to that, since we're almost done, we also are working on having financial education in Kenya. We had submitted our documentation to the Ministry of Education so that if the government can allow, then we can spread this savings knowledge even to primary school kids.
Bwana David, your call to action in as far as savings is concerned.
One, from AMFI, we encourage our members to save and save for a target, save for a purpose. 2, we encourage Kenyans to invest the amounts of money they have invested, grow their businesses through that savings. 4, we encourage families, so those are households, to train their children to start saving from a very young age. That way we will be able to build resilience as a country. And we should be able to ensure that the lack of unemployment for our youth is a thing of the past. Number 5 is to the farmers also, that we need to encourage savings at the farming community level, so that now we are able to grow resilience in terms of food security, and continuously develop the culture of saving in this country, to ensure that saving is a very, very important component of our lives.
Madam Claudia, your call to action.
My call to action to everyone is savings is not very hard. It's not actually hard. Let us all embrace a positive attitude towards saving. Let the partnership and the government work hand in hand so that all of us are geared in towards savings for a better future for all of us.
John Atuhura, as we conclude.
Yeah, my call to action is directed towards 2 segments, to the individuals and to the circles. And to the individuals, let us save for a brighter tomorrow, start early, and of course save regularly in small amounts. It still counts. Set clear goals as to why you're saving. Save for long term, not short term, and also think about the future. We need to have resilient communities as we move forward. To the circles, collaborate, enhance partnership with other institutions to drive your agenda as the saving institutions. Cooperate amongst each other, so that you're not looking at each other as competitors. And of course, inclusivity is key. Let's be open to everyone and embrace everyone the way they come.
Asante sana.
Thank you very much.
Thank you everyone for gracing our show. We've been talking to David Mukaru, who is the CEO of Caritas Microfinance Bank, and Claudia Ngaira, who is the Capacity Development and Financial Senior Advisor at DSIK, and Joanne Atuhura, Head of Finance and Administration at ACOSCA. My name is Mike Megwe. Good Morning Kenya takes a short break. Vivian will be right back to take you to through the next segment. Good morning.